Hello everyone, welcome all to Trade Only in the Zone. I'm welcoming you all for the free webinar presentation. So here we are going to discuss about the topics are how to trade future by using options for hedging and how this method helps a small capital trader to utilize this opportunity. Since we are now facing the SEBI new rule, margin, leverage has been reduced. So we have to pay the higher margin to take a positions. So the final one will be the stock recommendation. As I mentioned, RVNL, that is Rail Vigas Nigam Limited. So these are the topics we are going to cover. So now we'll see first, so the how to trade futures using option hedging. So before moving to this topic, first we need to know the basic about the future and options. So what is future and what is the option? In our Instead of going in depth, I'll just say in the layman language to understand very easily. So, for example, you take now, you are going to buy a two-wheeler. Okay, you are going to buy a two-wheeler, the price of 1 lakh. Just keep like this. Okay, so by buying the two-wheeler, you will carry the risk of, like, in case you get accident or damage, you will lose the whatever the investment you have invested on the two-wheeler. So even the natural calamities can affect your vehicle and it may get damaged. Okay. So in order to secure this two-wheeler which you have invested 1 lakh on it, you are going to buy a insurance, right? So you're going to buy a insurance. So it doesn't mean if you buy a insurance, it will save the entire 1 lakh capital. It can save the entire 1 lakh. It should not be go wasted. It can save up to 70 to 80% of the loss. So that means if you lose the entire vehicle, you're going to get around 70K back. That means 70,000 back to you by insurance company. Like, right? I think now you understood. So for what this example for? So here, trading in the future is almost like buying a two-wheeler. The trading the future, like you're going to trade a huge lot, like there will be a lot size which is around 500 quantity or 1000 quantity, whatever the may be the stock quantities. If you take even the nifty, the lot size is 75 quantities, and bank nifty it is 25 quantity. So the risk factor is huge in the future. So previously what we did using the brokerage leverage, so we used to trade in the stock for the intraday, and now the margin and leverage has been reduced, and we need to pay the huge sum of amount to take a positions. So for that only this video is meant to be. Even in the Telegram channel I have already posted. I'm going to come up with the small videos about how to reduce the margin uh, risk, like in order to take the future as a position, we need to pay the huge margin. That means I'll explain you with small example. If I want to trade in the Reliance future, so the Reliance lot size is 550. If I want to take a lot, one lot positionally, then the Reliance stocks now trading around 2000 rupees. We'll go to the calculation as per this method. So I'll just take this scenario. Now the lot size is 550 and the current market price is 2000. So that means my required margin is, we can calculate based on this. The total required amount is to carry this position in the cash market. You need to pay 11 lakhs. But in future, it is only a contract. So you need to pay the margin money, which is like 25% of the stock value. So which is around 2,75,000, and the span margin, which is called it as span, like there is a risk involved, and exposure margin we used to call the exposure margin around 2.5%. for this particular stock. So which is around 27,000. So altogether it comes around 3 lakh. We need to give a margin to the broker. So even if you want to trade now, you need to pay this margin to take a delivery. Means to carry forward, you need to pay 3.3 lakhs approximately. You need to pay to the broker. So this is the overall risk you are going to carry now. So in the scenario, I'll tell you, like you are taken a position now in the Reliance, which is we are going to buy at 2000. So if the price move towards your target, like towards upside, you are going to gain for one each point, you are going to gain 550 rupees. That means if 100 points moves up, then your gain is 100 into 550. So 55,000 you are going to make a profit. So we are not sure about the carry forwarding risk. Anything can happen in overnight. So what will be the risk in case of downside? So if 100 point goes negative, so check our loss. The same 555,000 going to be a loss. So in order to avoid this loss, we are going to hedge our position by using the option, by buying the insurance. So that is what we are going to see. And one more benefit also you are going to get by buying the insurance, your required margin also will be reduced by gradually, like up to 50%. So now you no need to pay the entire 3 lakh as a margin. Now you are going to pay 1 lakh 50,000 as a required margin. This is what the magic going to happen by using this method. So we'll see in the example of the current scenario. So I'll just explain you with just the same Reliance, the stock which is trading at the level of 2000 range. See, check now. So now the Reliance which is trading at 1947. This is what the current price. So I'm planning to take a buy position at this level by seeing the price action. See, now it is in consolidation mode. So anytime it can break, it can go up. So my stop loss will stands around here, right? So as per the plan, what I said, it is going to be a 100-point risk. That means I'm going to take a long position here. My stop loss stands around this level, right? So again, the lower low means it is around 100 point. So this is what my risk is. My reward, it should be 1:1 at least. So this is we are going to see in the virtual trade. Like we are going to take a help of option Abstra website. Okay. So now we are moving into the strategy builder. So where I can take a Reliance for example. So I'm taking a Reliance. So it is only just example. Don't take trade. Just for your understanding, I'm taking the Reliance. I'll give you the real trades also. What position can be taken for a coming week. So this is for a understanding purpose. I'm giving a Reliance. So now see the Reliance. The future I'm going to buy at the current market of 1956. I'm just adding my position. Now see the required margin as per the brokerage. It is showing 2 lakh 50. So that means there will be a 3 lakh here and there, somewhere around 3 lakh we need to pay as a margin. Now see the risk which you are carrying it is undefined. In case of huge gap down by any news, you lose huge amount of like your capital. There may be an unlimited loss. In case of now stocks trading at 1947, if in case of any news, if stock falling by 100 points suddenly, you may lose around 1 lakh rupees of your capital because you are carry forwarding the position to the next day or next week. So anything can happen in the market, like a bike, what we just discussed in the introduction phase. So now we'll see by taking the option what is going to be our benefit. Just see here. So now the risk is undefined and the required margin is around 2.49 lakh. So approximately in the brokerage in the live trade, it may around 3 to 3.5 lakh. So option as Abstra, it is not going to give a exact value, but in the real trade, it may take 3 to 3.5 lakh. So now what I'll do, I'll take just a insurance, which is at the next strike price or the next to next strike price for the hedging. So we'll see here, I'm taking a long view. The price going to go up. So I'm buying a current market price 1060. So I can edge my position by taking a put option, which means I'm going to take a put option of 1000. Sorry, this is not a Reliance. I'm just taking a Reliance in the option chain. So it is a NSE old website. So since it is working, so I'm using it. It is very easy to find the open interest change and all. So that is the reason I'm using it. So new version also it is available. You can use new website also. So just I'm taking a Reliance. So Reliance, just I'm taking an option chain. So option chain you see here. So 1950 is the current market. Around 1950 at the current market. I'm going to buy here. I'm going to edge my position by taking 1900 put option, the next strike price, which is trading at 48 rupees premium. Okay. By adding this, we'll see the magic here. Again, I'm moving to option abstract. So I'm changing into options. I'm changing into December, same expiry, the month expiry, and 1900 is the strike price, which is PE. That put option I'm going to buy. So put option I'm going to buy it at premium of 48 rupees. Now you see the changes now. Now you can see the risk is defined. Even if price gap down 200 point, you may lose 2 lakh in case of naked position. Now you have an option edged. So even if price moved 200 point gap down, 300 point gap down, 500 point gap down, we don't need to bother. It is not going to happen in the one day because we have a circuit lock, lower circuit limit. So even if the price fall under point down in the opening itself, we will not lose more than 52,000. But day to day, that is T plus 0, what will be the loss in case price fall 100 points. You can see here 1095 950 is the current price. 1850 I'm just keeping it. I'm rolling it. You just check 28,000 only you are going to lose for T plus 0. That means the current trading day. So in case expiry happened at this level, you are going to lose 52,000. The loss will be going to be yours. See, now you are reduced your risk, right? So taking 100 point stop loss, you are going to lose 1 lakh in case of stop loss. Now keeping this option as a hedging by purchasing a 48 rupees premium, you are reduced your loss into 50%. That means your maximum loss will be 52k. That too in the T plus 0, that means current day trading, you are going to lose only 30k. Okay, so that is the power of option hedging. So now we'll see one more magic. You see here, the previously it was showing 2.5 lakh. Now the required margin reduced to 80,000. So that means in the brokerage, they may take 1.5 lakh from you, which is not the exact price. While executing the order, they may take 1.5 lakh from your margin. Now the required margin also reduced 50% to you. Okay, this is the magic. It is going to happen. Now we see in case price moves towards the target, what will be our gain? You check 2050. If price move 2050 range, then your benefit that the price, the profit price will be around 35,000 rupees. The whatever the loss you have kept for 100 points, the same will be your benefit. So even the profit is unlimited. If stocks started moving up towards up, you will start gain the profit. Okay. Only at the expiry, your break even stands at 2005 because you are purchased the future at 1956 and you are buying a premium of 48 rupees. If you add this both, your break even stands at 2005. If expiry comes on the expiry day, if Reliance closes at 2006, you will get the 1 point benefit. That means 550 rupees as a profit. That's what it is showing here. So after the break even, if price started move 1 rupee, 2 rupee, 3 rupee, then your profit gets increased only at the time of expiry. But T plus 1, that means the current trading day, you will be under very good profit. If the 100 point reaches here, then you will have a 30,000 profit for you. See, this is what the advantage by using option hedging to your positions, right? I hope you understand the benefit of option hedging. Then how to execute the orders, I've already explained. First, you have to buy a future and immediately you have to execute your put option, the next strike, which is like the at the money or the first out of the money. So if you took this position, your risk is reduced and your margin also reduced. So for this week, I have two stock in my watch list where Sriram Transfin and Muthoot Fin. The both the stocks are in sell opportunity, the selling opportunity. Even Reliance also it is in buying opportunity. The price action says there is a up move and now it is consolidating. So anytime it can break and go up. Okay, so buying this by keeping the 28,000 risk, that means the 100 point risk. If you are buying with the option, you are going to take a 30,000 risk for 30,000 profit. Even more than 30, you may get it. So if you are not ready to take the risk of 30,000, then you will not going to get 30,000 as a profit. So if you want to take a 30,000 risk, then your capital must be more than 5 lakh, because you should not like take more than 5% at the single trade in a month. Your overall month risk should be 5% of your capital. That means 25,000 you can take it as a risk. Okay, this only one trade is recommended per month. You are not going to take a five more not more than 5% of your capital. First understand the risk reward policy. So now we'll move on to the Sriram Transfin, what the technical says. So technically you see here, this is 1 hour chart. There was a double top and the neckline got broken completely here. Now the target stands at here, but the support level is here. Okay, I'm expecting the price to fall to the support level. Even if the first target comes, then we are going to get a benefit of 1:1. Okay, we'll see the trade setup now. First, before going to the option abstract, we'll just check the technical facts. This is the previous resistance and the support was broken here, and the price may now retest this level and again it may fall to the targets. Okay, we'll see as per the double top, the target will be around here because the same height to be kept as a target. So your target around 950 rupees. So by seeing this short position, you are taking the short here and your risk is around 70 point and reward is also around 70 point. Okay, so this is going to be our trade. So before going to the trade setup, we'll check the option chain for the better confirmation whether it is in selling pressure or sell side or buy side. We'll move on to this NSE website and I'm just taking an equity derivatives and SRT, Sriram Transport Finance. Okay, so I'm just opening the option chain. If you know, if you don't know the option chain analysis, in the previous videos, I have an option chain analysis video. You just watch that option chain analysis, how to do option chain analysis. Now check out here, see the open interest, which stands at call side. It is going to act as a resistance. Now 1,12,000 1,12,000, 1,23,000. See here, it is 3 lakh. It is a huge resistance as per the option chain. I see the option chain as a seller perspective. So 1,100 going to act as a resistance. We'll see the support in the put side. See here, first strike at the money as a support of 1,10,000 contract. The next is very weak, and the next support stands at 900. The technical is already indicated as there is a weakness in the trend. The price is going to fall below, and option chain it is confirming us. So check now, the 30,000 sorry 900 is going to act as a support. See the low 900. So see the resistance 1,100. This was the beauty of option chain analysis. So resistance already acted. So see the December month contract which is open already. So see the immediate resistance was acted and the price falling down. So I'm expecting the maximum target of 900, which is around 100 point. The price can come down to the target. Okay. So minimum target is 950 and maximum target is 900 rupees, right? So I'm going to execute my sell order at 1,020 rupees. My stop loss is around 70 point. So now we'll move on to the option upstart for strategy build. Okay, so now I'll reset the chart. So here I'm going to take SR transpin. So I'm just going to sell. I'm just going to sell the future at the price of 1,020. I'm going to add into position. Now see, you don't see the profit now because the current price it is like slightly down, so it is showing the profit. Now see the risk undefined and require margin almost similar to airline stock. Okay, anyway they are going to take 3 lakh from us. The risk is same like point, right? If you check 70 point, in case stock moving 70 point up, then our risk where it is going to be from the high. Like from here 70 point means 1,070. So our loss is around 36,000 rupees. Since it is lot size is 670, our loss is going to be a 36k. Okay, it is only for intrad. In case of carry forward, there may be a gap up. Yeah, there is a possibility because Serum Transfin move violently. See the momentum which has happened from 19th November, from low 900 to 1100, around 200 points it is moved. And from December, like November 27 to till date, it moved around again 150 point range. Sorry, from here it is 200, and from here it is almost 100 point fall. So it is moving like anything. So without having an option hedging, if we go into the trade, we may lose huge money. So now we'll see the strategy. So what I said, I have to take at the money or first out of the money. Now I'm shorting my position. I'm taking a short position at this level. I'm going to take a hedging. So which means I need to buy a call option. So if I want to buy a call option, the current price for the strike 10,020 is 55 and the first strike is 10,040. So I'm planning to take sell only at retest, that means 10,020. So then my option will be 10,040, right? So 10,040 I'm going to take. So you just see, imagine it. So now the current at the money strike trading at 55. If stock comes to 1,020 to take my sell, then my option price will be around 55 rupees. So I have to consider as a 55 rupees as an option price. I'm going to take it my position. So what I'm doing it now. So I'm taking option. I'm going to take 1,040, 1,040 call option because I'm going to short my contract. So I'm going to buy it with the price of 55. Here it is showing 46. As I said, if price comes to my sell, then it will be 55 rupees. So I'm going to add at the price of 55. Now you see my risk was limited now. Previously, if price goes higher, I may lose 36,000 rupees. Now, don't worry, it is shows 50,000 since the price is trading at 1,000 now. So we have to reduce the 20 points. So that means risk comes around 36,000 only. The maximum risk 30 to 40,000 only. Okay, because the current market at 1,000 rupees. So see, the risk was defined now. My required margin was reduced very gradually, like 10 times. Sorry. So anyway, it is going to ask 1.5 lakh from my capital to pay the margin, right? My margin was reduced 50%. My risk also defined now. So now we'll check in case from the current market, if price moves 70 point, my loss will be around, see, 1,000 to 1,070, just 70 point concept. I'm going to lose only 16,000. Previously it was 36,000. Now it is around 16 to 17k. My loss also reduced now. My margin also reduced. Now we'll check if in case price goes to our target. So from here I've kept 100 points. So that means it has to go to 900. So if it goes 900, I'll get around 50,000 as a profit. So I don't want to bother about any carry forwarding risk. Even if price gap up 100 point also, I will not lose more than 50,000 on the daily basis. That means the MTM and daily MTM basis T plus 0. If price opens 100 point above, that means 1,000, 11,000. I'm sorry, 1,100. I'm going to lose only 23,000 as day MTM loss. Only price expire at this level, I'm going to lose entire 50k. But if it is intraday basis, I'm going to lose only 23,000 rupees. So even if price comes 100 point down, gap down, you just check, we are going to get 45,000 minimum base profit. So this is the power of option hedging. Okay, so this is the first stock I'm going to recommend to you. And the second stock is Muthoot Fin. So again, I'm telling it is a disclaimer. Taking a trade, it is your money involved, your hard-earned money. Please refer my disclaimer in the YouTube channel below the description. So don't take any position without knowing any risk management. Like whatever the capital you have, based on this, you have to take a risk. Now again, you see here the Muthoot Fin. So there was a fall from the top. Now you can see here there was a fall from the top again. So the price now it is moving nicely up only, but I'm not very sure about the up movement since the higher time frame suggesting the bearishness in the stock. See here, so previously the high, low, high, again lower low. The low was broken and again retest. Now price trading inside this range. So anytime price can fall, even price can move up also. For upside, we are going to take a insurance to reduce the risk, and downside we are going to enjoy our profit, right? So what will be the sell level? As per technical, now the fall has happened from the top. Now prices at retracement point of 618, right? So it is trading at 618, the range. So just I'll change my setting. So I'm going to add 618 in the chart. So see, now it is trading at 618 level. It is touched and it is falling now. So again, if it comes up, I'm going to take a sell entry and I'm expecting a fall towards the down. Okay. So before taking into trade and option extra setup, we just check with the option chain. So what will be the option open interest? Again, equity derivatives, Muthoot. So option chain. So now see the option chain open interest which is stands at, so at the money and in the money both are having a 1 lakh 30 and 1 lakh 40 respectively, and then see here suddenly there was a huge open interest at 1200, 4 lakh 73,000 contract. If you see the downside, there was no support. See, it is very weak, and this immediate support looks at 1100. Okay, the next support stands at 1000. As I said, the stock price it is looking slightly weak. The buy side it is not going to move. It may take sell side, so it may fall down. Okay, so option chain also it is confirming there is a bearishness. So by having this setup in our mind, so what will be our target? In case price move down, I'll take just a basic Fibonacci extension tool. The stock may come to this level from the current market. I'm expecting the fall towards 1, that is 273 points. So again, I'm making this as a positional trade where it may take 1 month also. We have to roll over our positions also. But for this month before expiry, what will be our possible trade? We'll check out with the lower time frame, right? Higher time frame says it is a huge fall, and we'll check with the lower time frame. Now you say check the lower time frame. This was the lower time frame, right? So now the stock is looking like forming a cup pattern, which is going to come down to this level again. That means 1020. So I can add my sell position at here by keeping this I as a stop loss. Okay, I no need to keep the next I. I have to take a sell position at this top. Okay, so if price comes at this level, I'm going to short, right? So my risk is this I around 80 point. My reward, I'm going to keep a target of around 200 or minimum 150 point. So which is for coming month expiry. Okay, so I'm going to take a 80 point risk and I'm going to get 160, 1 is to 2 risk reward ratio. Okay, so we'll check with option Abstra what is the margin required for selling only a future. Then we'll see with option hedging what will be the required margin, right? So I'm just resetting it. So now Muthoot. So Muthoot, we are going to sell a future at current market price. I'm not going to sell at current market. I'm going to sell at 1220 only. For your understanding, I'm just explaining the risk and reward. I'm going to take 80 point risk after selling here. I'm going to take a 160 point profit after selling at that level. So for that, I'm going to explain you what will be the strike price we have to go and take and what will be the risk reward. Okay. So by selling the current market price, see here. So I'm adding the sell position. Look at the margin required. So again 2.6 around 3 lakh we need, and loss is undefined, right? So now I'm adding the option. As I said, the current market price at 1070. The next strike I'm going to take the call option, right? So option, then I'm going to take 1180, which means very near, only 10 points. So this premium is trading around 50 rupees. The premium is trading around 50 rupees. Okay, so I'm adding this position as a buying, sorry, so I can modify here, it is buy not sell. So I'm adding it into buy. So see now my risk is reduced 43,000, the maximum risk, and required margin is 10 times reduced. But exchange, the broker will not give in this price. They'll ask at least 1.5 lakh from you. Okay, so if you have 1 lakh, 1.5 lakh, you can take this position. Your maximum risk is 43,000 in case of expiry. But as per our concept, if 80 points goes up, we are going to lose our trade, right? So I'll just check if 80 points goes up, what will be our loss? So from current market price, if 80 points means, so it is approximately 1250. So if I go 1250, my loss is around 21,000 only. Okay, so in case if I doesn't have the option in my position, what will be my loss in case of 80 points up? That means 1250. See here, it is 58,000 rupees if I doesn't have an option in my edging. Okay, so I'm adding anyway the option. So now my position got edged. So now see my risk. Earlier it was 58 and now you see here. So it is only at 23,000 rupees. See the difference. It was 50% your risk is going to reduce. Okay. So anyway, so we are going to get a margin benefit also. We are going to get a defined loss and the profit will be unlimited. Even price fell 200 points also, we are going to earn huge. We can keep till the expiry, right? So if price fell 200 point, you just check from 1072 and 970, then you are going to earn around 1 lakh rupees if the price fell before expiry. Okay, there is a chance it may fall because it is giving a consolidation. If any news comes, there may be a sell off. Okay, so we can enjoy our downside profit, right? So this is how that option edging works, and this is how you need to edge your position. If you have any doubt, if you want any clarification, the below the description I have left my number. You can contact me. Even our telegram channel is there. You can ping me in a telegram channel. So how to execute these positions? Again, a disclaimer, this is only my watch list. I'm going to trade at these levels. As I said, I'm going to sell at this level only. My stop loss will be defined and loss will be defined by edging my position. I have a capital of 5 lakh in my account so that I can take this both the trades, Serum Transfin and even the uh, Muthoot. So if one goes loss, one comes profit, I will be end up with a decent profit, a monthly return of my capital around 10%, 5 to 10% monthly gain. Okay, so plan your trade according to your capital availability. So don't take much risk. Taking more than 5% risk in a month, it lead you to a huge loss. Don't take more than 5% risk. Again and again I'm telling, this is only my view. If you take, please take with your option edging, and please consult your financial advisor before taking any position, right? So these are the two stocks I'm going to give a recommendation. I've given it Sriram Transfin Cell and Muthoot Fin Cell. And the final one, the RVNL, which is going to be our positional buy in cash market, not a edging trade. Okay, it is not in F1. So I'll suggest why this stock. Okay, fundamentally it is good company. It is based on railway projects, like the railway project, right? The track, bridges. So those are the orders which they are having it right now. So now you can see the trade setup. So why I'm suggesting the buy. So initially when it is offered in the IPO, I applied, but I didn't get. But when the price fell 22 rupees, I bought around some quantity, and again the price moved up. I didn't book because I was waiting for 40 rupees target. So unfortunately the price fell to the very bottomest level of 10 rupees. There I didn't average it because I thought if comes up again we can average our position. So again I averaged at 20 rupees when the price hit this 20 rupees mark in the July month of July. So now my average price stands at around 22 rupees range. I'm still holding it with a profit of 2 rupees. My expectation was at least 30% from the current market price, right? So that was my call. So the now the current market stands at 24 rupees. As I said, I'm expecting a 20%, sorry, 30% return on this from the current market. So 30% means it is around 31 rupees. So where we can make very good return in the short term. You see the technical confirmations here. So this was the previous support, the price. broken the previous resistance. So this is the previous resistance too. Okay, so I'm expecting a bullish move, the very big bullish run now. So stock can move above 30-40 rupees also. But again, a disclaimer: it is your risk reward. You check before taking trade what is your risk that you can afford in this stock. So my suggested quantity is buy 1,000 quantities, which is cost you around 24,000 rupees. So you can expect a 30% return, means the 7 point up. That means 7,000 rupees you are going to make a profit within a short time. I can say like in 3 to 6 months, it can give you a return. Even if price fell below this level, that is also not a problem because you are invested in a very good company that 24K. So anyway, after 1 year or 2 year, it can gain your whatever the investment. Okay, so it is suggested because previously I suggested few stocks which has performed very well in the last few weeks. So every week I'm recommending a stock. I'll show you the what are the stock I've recommended, how it performed. The similar way I'm recommending this RVNL now. So if you wish, before taking a trade, again a disclaimer, you discuss with your financial advisor and take a position. So my suggestion quantity is 1,000. So you can invest 24,000 rupees here. Okay, so I'll show you the my portfolio where I recommended and I have took trades. Okay, the recent week I took a Viva bullish in our IRCTC. I clearly mentioned price break 1,418. You can go with buy. The target of 30% ROI or the target of 1,967. Okay, from here you check 30% ROI. From here you check 30% ROI, almost here. This is going to be our target. Okay, now price is almost reached around 13%. Okay, then at same day on Friday the market shot up, and the previous video, if you are not watched, you can check the previous video. I explained the history may repeat, right? So the history is repeating again. So this is what happened in the previous history. The stock moved violently. So again, the same thing is happening. Again, I'm expecting a violent move. That is what I suggested, and the stock is performed, right? So now it is in good profit. And again, I have recommended UPL, Jain Irrigation, PA Industries, the three stocks on Muhurt trade, Diwali Muhurt trade. So UPL, I've recommended, the recommended price was at 425. Now price trading at 8% gain. So here also I'm expecting a 20% return. So it may take 1 year, 6 months to 1 year to give the 20% gain. So it is already in my position. Currently we are at 8% profit. And Jain Irrigation, I've already closed my position since it is given a 30% return in the very short time. When I recommended it, it was around 15 rupees. In my Telegram channel, it is available. So it given a 30% return. It is a very good return. I've already booked my positions. Okay. So PA Industries I've already given. So now it is trading at just 1% profit. After my recommendation, stock fell down, but still I'm holding it because I'm expecting a same 20% return in this PA Industries also. Okay, I'm just having a very few quantities because I don't want to take much risk on it. So this was my target for fee industries in the upcoming months, 6 to 1 year, 6 months to 1 year period. I'm expecting this to be happen. Okay, and I've recommended Eacher Motors, which is at 2,150. It was a fantastic rally, and as I suggested, it moved 20% from our buy level from 2,150. It moved 20%. I've already exited my position. Since now the market also trying to reverse, it may come down to the support again. So again, if comes here, I'm going to buy because the target is positionally huge. So now I partially booked. Now if price comes again, I'm going to take a buy again. Why I'm taking a buy again? I have already explained you in the previous videos and previous recommendation also. There was a cup and handle pattern. the price has to move the same level. That means 3,500 is the ultimate target of each motors, right? So every week I'm recommending the stock which is having a very good fundamental and which is giving a technical confirmation to buy. So none of the recommendation failed as of now. So but still, again a disclaimer: taking a trade by your own risk, your own money is involved. Please know your risk before taking any trade. Okay, so thank you for watching this, and we will come up with then a series of video regarding the stock recommendation in the every week basis. So this week I've recommended RVNL. We'll see the performance in the coming week. Okay, so thank you guys, thank you for watching it.